All right, good morning, everybody. Sorry about the delay here. Technical difficulties this morning. Let's kick it off. All right. Friday session, bit of a non-event. End of the day, we had a little bit of action there to the upside. I think it was really more due to the fact that we had some index rebalancing, primarily out the Russell, that really got markets kind of driving up into the close. We had we had the FTSE index reweighting maybe a couple of weeks ago, and that also really got some big movements going in our market. So I understand that it's going to also happen there. We did see better than expected Michigan consumer sentiment numbers on Friday, kind of going down the path of continued better than expected numbers out of the States outside of these GDP numbers that we've seen. And then we saw that DuPont, which sold off pretty heavily after lowering its quarter one and full year guidance on Friday. But other than that, we really did kind of finish at the highs. Just continuing to stay in this bull market trend at the moment. Right, in Asia, we saw most of the markets up across the board outside of Australia. Australia kind of couldn't keep up with the rest of the sector there. Some of the mining stocks lagging a little bit, but we saw some upside in the telecom sector out of China and a couple of the tech sector shares in Japan this morning as well. So if we look at if we have a look at kind of the lack of volatility that we've seen in Asia as of late, relative to what we used to see, it's been absolutely just benign, and we've also started to see a little bit of a disconnect between the Japanese yen and the Nikkei as of late. There's been a little bit less of a correlation. We saw another round of strengthening out of the yen last night. We saw the Nikkei managing to kind of keep its head above water, and just kind of everything, not quite showing that high levels of correlation. We're obviously not getting any real levels of volatility on any of these things, but it just kind of seems like everything's just kind of floating around, waiting for something to give us some leadership at the moment. If you have a look at these four charts here, really interesting little graph here by the Wall Street Journal, and basically showing the correlation between Europe and Japan since Japan's lost decade after the real bust in the 90s. We have Europe doing very, very much the same thing over the past several years, and really showing even after Japan went bust there in the 91, we had we've had the same sort of move from 08, 09 levels out of the Eurozone, but they've actually been less and less powerful than the moves out of Japan, which is not a good sign. You're obviously also dealing with other things like unemployment rates that are exceptionally high at the moment, which were never those types of levels in Japan. But the big the most important things to look at here are really the inflation numbers, which are non-existent, combined with the real poor demographics numbers and the essentially shrinking population. So it's a big problem in Europe at the moment. And that's just kind of going to show you, we've seen very little growth out of Japan over the past couple of decades, and we may see the exact same thing out of Europe. Right, corporate action out today. We've got a lot of stocks paying divs. We've got Clicks, we've got ATN, we've got PFG, we've got Eleva, we've got Nempak, and we've got Foschini. Foschini paying the biggest one at $2.93. So just keep all those in mind today. Don't get caught up in trying to get involved there at the open on a mispricing. Right, market data out today. We had some Japanese industrial production numbers, which were slightly softer than expected, as well as softer housing starts numbers this morning. We have German retail sales. We've got money supply numbers here locally, as well as private sector credit growth numbers. I haven't actually even seen those yet, but they're out. We've got the same numbers out of the Eurozone at 10. We've got mortgage apps in the UK at 10:30. We've got CPI estimates in the Eurozone at 11. We've got trade balance in South Africa budget here at 2 o'clock. So obviously we could see a bit of a move in the rand around that. And later in the States, we've got Chicago Purchasing Manager numbers, as well as pending home sales and the Dallas Fed manufacturing numbers. All right, let's get into the maps. Okay, first thing I want to look at, actually meant to show this a couple sessions ago and somehow just left it off the list, but we're going to have a look at the 30-year U.S. Treasuries, and we've had an incredible rally here in the Treasury market. That's obviously taking yields down to the low threes again here, when we were really pushing up near 4% only back at the beginning of the year. It's been incredible because we've been, U.S. market has been so solid, and the equity market has been rallying the whole time. The economic numbers have been really good, and you're not getting the reaction that you would expect out the Treasury market. Here you can see we've got we came back up and tested this level again the other day on the neckline of the head and shoulder pattern at call it 340. 3.48 on the yield. We held it beautifully, and we're now pushing back down toward recent lows. I think that we've got more upside in the Treasury market, obviously downside for the yields, and and I think that's telling for equities. I think that so long as Treasuries sustain these exceptionally low levels, equities are probably going to continue to drift around. Remember, we're looking at probably a hell of a different relationship between equities and Treasuries that we normally would be looking at. And normally this would be happening in a bear market. This is actually happening in a bull market. So we're looking at a totally different relationship, and I think so long as people expect there to be exceptionally cheap money out there, that equity markets are going to manage to continue to grind higher and hold up. All right. Let's look at Able. Friday made a key reversal in style. I think we were up 12 or 13%. You can see there busting up out of this and also reversing up out of this flag pattern here. And you can really see that we took out the lows. We made new I think 9 or 10 year lows on Able down at around 570 odd. And then we reversed all the way up to close at 680. We're definitely breaking out of the short-term downtrend here. We're definitely made a key reversal. I think this is really telling. I would say the first level, which we'll probably look to test, will probably be up here closer to $8, and then potentially on even higher from there. But that's your signal. Friday's action was your signal if you're short to get covered, and if you're looking for a place to get in on the long side, that's the time to do it. At least technically, that should be the time to do it. All right, we'll look at Coronation. Coronation, we have shown plenty as of late, but I just wanted to show this again. You can see we obviously dropped below. Let's just pull this here so that we can look at this chart. Dropping the head and shoulder level there, and then really putting in this big space of consolidation for the last almost month. And what you can see there is we really dropped out the bottom of that yesterday, especially on a closing basis. Took that out, took 95 out, and closed down south of 94.50. We talked about this one, I think, on Thursday or Friday again. We love the fact that it was consolidating right below the neckline, and now it really looks like it's due to really break down. We're expecting 10 Rand a downside on this from the breakdown at 98, so the target here is going to be about $88, which is going to probably line up spot on with the 200-day moving average if it does pull back down to those levels. All right, let's look at Sasol. I just wanted to throw this one in there. This is nothing really spectacular, too exciting to look at here, but just wanted to keep it in mind as to where it is at the moment. We're definitely flagging lower here in classic fashion. What would be, I think, wonderful would be to see this thing come down, flag all the way down to 600, test there, and then reverse higher. We do have a little bit of support here around. Let's just have a look at what that level is. I want to say that's 6, call it 613. Okay, we've got a little bit of support there. and we might bounce off of that level. Either way, we're going to look to wait to see this thing bounce up outside of its flag before we can look to enter a long. The chart's still looking very bullish. Definitely one to be buying on pullbacks. We're just going to be looking for the right level. All right, Impalas, I'm only showing this one again. I know we've been showing this a lot, and I'm talking my own book here on this thing, and but we did make a new closing low going all the way back into to August of last year. So we're looking at about 10 months that we've just taken out closing lows. I think it's important just because we've tested these levels so many times, and we still haven't actually dropped the 8 level on a closing basis, which I think it's going to have to do the 108 level in order for us to really break down. So 108, there's definitely a little bit of what you could call support here. 1, 2, 3, 4, 5 wicks touching 108. If it gets below 108 and can close below 108, I think this thing's a goner down to 100 or below. But just keep an eye on it. It's feeling a little bit shaky today. Obviously, quarter end and month end, so they may come to save some of these stocks today that the guys are heavily invested in. Just keep an eye on that. But if it can't get going today, then I think it's bad news there. All right, Bidvest. I'm just having a look at this on the maps again this morning, and you can see Bidvest here looking a little bit head and shoulder-ish. And it's not necessarily classic because they're very flat shoulders, but 280 would definitely be your level here. If we drop below 280, either way, even if you don't really like the head and shoulder setup here all that much, you definitely can see that we're dropping some sort of support there. And I think you can definitely see there is, to an extent, some sort of head and shoulder there. And I think a reasonably lower target if we can drop 208 in Bidvest. All right, and the last one we'll have a look at is in London. It's Admiral Group. Popping up out of is the flag. Beautiful flag pattern setup, kind of coming back down in here closer to support. Maybe dropped support a little bit, but only to reverse hard out of this flag, and definitely looking to take out highs of the year on the breakout over the next few sessions. That's it for today, guys. Thanks a lot.